Hello everyone, welcome back to my channel. So this video marks the end of the week number 16 in this road to 200k challenge, and this week has been quite negative for the overall market. Stocks have been going down all through the week. Every single day the S&P 500 had a negative performance, and of course our stocks weren't, even though of course they were somewhat affected by it, but less than one might expect. The main issue here is that Pfizer has been taking a beating over this week, and mainly because there is initially it was a rumor. Now it gained a little bit more traction that President-elect Donald Trump will nominate Robert F. Kennedy Jr. To head the Department of Health in the United States once President-elect Trump takes office. And given the fact that Robert F. Kennedy Jr. is a widely known anti-vaccination, and especially when it comes to the COVID-19 vaccines, most of the pharmaceutical stocks in the S&P 500 and in the overall market took a turn for the worse. And in the case of Pfizer, that meant that our stock is currently valued at $24.95. So it's more than $3.50 below our acquisition price of $29.50, and so that basically impairs our ability to be able to sell some calls on it. And so as you can see right here, for the next week there are no calls available to sell at the price of acquisition that we have. And of course we would have to stretch our maturity further into the future. And even so, as you can see, of course now the market is closed because it's the weekend, but still you can imagine that even 3 weeks out from where we are at the moment, we would get a meager premium between something like 2 cents and 4 cents. And so it's not really that much worth it to place a call right now, and we'll have to wait and see what happens. I still stand strongly by this stock. It's a good quality stock. It holds at this moment a very, very high Morningstar rating because the stock is understood as being quite undervalued. The consensus is it's a buy. It has a buy rating for most stock analysts, and of course he has a wide economic moat and a medium uncertainty, and this moat is expected to continue further into the future. And actually at the beginning of this week as well, Morningstar released an article, as you can see right here, and at the moment, as of November 7th 2024, so a little bit more than a week ago, these were the top 10 defensive stocks to buy now, according to Morningstar, and Estée Lauder companies tops the list, of course, because it now is perceived as being extremely undervalued, and Pfizer appears here in 4th place. And so I'm still confident that there's a lot more to come from Pfizer, and of course by Estée Lauder, from Estée Lauder. And so that's why I stand by at this moment from where we are, and I'm excited to see what happens in the coming weeks. And also to give you another perspective, this is a list that has been shown up again on Morningstar website, and these are the 10 most undervalued stocks as per October 30th, and Estée Lauder here again in 1st place, and Pfizer here in 6th place. And here, as you can see, this was still before the earnings were released. That's why the price to fair value is 0.5 here, because it's after earnings. This price to fair value became even more favorable at 0.39 for Estée Lauder, and so that is why this stands as being something that may come into our way in the near future, and so let's wait and see what happens. But for the time being, this is the situation now. Ford Motor Company didn't move that much, so it remained where it is right now. And at this moment, basically we are also unable to sell any calls on Ford Motor Company as the price stands at the moment. As you can see, we would have to go 3 weeks out into the maturity to get some sort of premium, and still it's only 1 cent for the price of acquisition we are looking for. And so basically, because that's almost there is a 1% certain probability that it will expire worthless, so the price will not be achievable within the next 3 weeks. At least that's what the market perceives. And so let's wait and see what happens. In the meantime, we're going to receive some dividends on this stock, and so we'll have to wait and see what happens. In the meantime, as for Estée Lauder, it has been up and down during the week between $64 and $62 dollars. Now it's almost at 65, and we took the opportunity to buy some more shares as well at the beginning of this week, as you can see right here. And so actually it was a little bit towards the middle. I think this if I'm not mistaken, this was on Wednesday. Yes, on Wednesday we bought 80 more shares here. We paid a commission of $1. So because the price was still favorable, 63.42 the average price, and so we'll have to input this in our scoreboard, see what happens, and determine what is the average price now, at which of course we are looking for to sell our entire holding from here on end. And this is how the week went. Estée Lauder, after the beating it took post earnings, the stock remained, of course, at this value, at this range between 62 and 64, despite the S&P 500 having coming down every single day of the week. So the stock has somehow sustained itself over this week. So we'll have to wait and see what happens in the near future. And so basically this is it. We'll have to input this in our scoreboard at the moment, so we'll have to add this one. Again, this is a stock that we bought on the 13th of November. Let's see here. Alright, so this is the 13th. Let's leave this field blank. We bought it here. Here it was a 63.42. If I'm not mistaken, this is the correct price. Yes, we paid a $1 fee. We bought 80 shares. So 80 shares, it's 0.8 of an options contract. So we'll have to put it here. As you can see, the price matches $5,073.60. It matches. And of course, this means that we receive no premium. We pay the $1 commission, and this is the price at which we are looking to sell this particular 80 shares to make sure we can at least break even. And so this is the price I'm going to consider here. And now let's determine at which is the average price of our holdings at the moment. And so let's see, we have to add plus and some more parentheses, and here the minus signal, and with this one times the number of shares that we bought. And now down here we'll have to add here the number of shares that we bought. So this is it. And as you can see, before it was $81.02, and now we have an average price of $80.38. So we are getting closer to the $80 mark, and at this point, if we sell at 80, we would already be, of course we would take a small capital loss, but still, because of the premiums we already received, we would be able to be in the profit overall. However, trying to sell at $80 through a call, as you can see right here, at this point is nowhere near available. And even if we stretch, for example, for a whole month or 4 weeks, this is something that now becomes available, but only at 5 cents. So we would have to commit our stock for an entire month, not be able to sell it if it somehow rebounds, and we will only be able to sell at with a premium of 5 cents, which is very, very small considering the price of the shares. And so this is something that does not make sense at the moment to do. So we'll have to wait and see if the stock recovers soon, so that we can start either to sell calls on it to make sure we get rid of it, or we sell it outright once it reaches the price that we are looking for. But for the time, this is it. Next week we'll have to wait and see what happens. Of course, any additional funds that we have, we're going to direct those to buying more shares of Estée Lauder to lower the average price. But for the time being, this is all. Feel free to leave your comments and your suggestions or any questions in the comment section below. Also, feel free to like the video and subscribe to the channel. I'm also available on LinkedIn in case you need to send me a private message with some questions. And yeah, I'll see you all next week.